Okay, at least we have chat going on now, very active. Can you see the charts now? Yes, okay, perfect. Sorry guys for that. I had my chat, I minimized the chat, so I haven't seen any of these issues. Anyway, so let's go from that VIX that I discussed earlier. Okay. So, as I said earlier, VIX, known as fear index, recently has seen a very huge volatile moves to the upside. Normally, this can suggest that the S&P 500 could potentially be stabilizing, coming into the support. So this was followed by a quite stable price action then on stock market after we have seen this volatile price move. So I'm thinking that this period is now coming in play here and could potentially mean that the S&P 500 will stay in correction or possibly even move to the upside, because we know that where there is not a lot of volatility and fear involved, that's the perfect time when the stock market could continue higher. And if you look here on this commodities versus the S&P 500 ratio that I also discussed earlier, but you haven't seen the charts. So that's the chart that I was discussing. That's an ongoing bearish impulse. So it looks like wave 1, wave 2, and you have very nice wave 3 to the downside, wave 4 rally, and wave 5 yet to come. So it looks like that the S&P 500 can still outperform commodities. I'm not sure if this said earlier, S&P 500 will stay in a consolidation or maybe even move to a new high. But I think that there's still a chance that actually the S&P 500 will move to a new high, because dollar index, in my opinion, still have also incomplete bearish trend, bearish cycle. And if you take a look here on the S&P 500 now, you have this ongoing potential triangle underway. And what's the most important is that even if you think that the wave 4 has been finished here, well, that's certainly possible, but what's the most important is that the drop from that July highs has been in 3 waves. So it was a correction or part of a more complex correction. In either case, I just think it's better to stick with this uptrend, because there is no reason to fight the trend when you have 3 waves down from the highs. Of course, it can always be correction can always become more complex and deeper, but definitely it's something that is not telling me that we have topped out. Okay, and as I said earlier, elections still this year, and I think that maybe till then, who knows, we will just chopping around here, then market will see more upside. Now if you take a look on, since I mentioned dollar, we can take a look here. Okay, so here's this dollar, and still you can see that we have recently seen a very nice and strong drop towards 100 level. That's 170. That's some support has been found recently, but still we haven't seen a break below these 2023 lows. Okay, so in my opinion, there is still room for more dollar weakness, and on the other hand, this could obviously keep stocks still in uptrend. Okay, so that's definitely what I think it's very important to understand, because the whole decline, the bear market that began back in late 2022 is still incomplete. You had these 5 waves down, correction, meaning that correction should be fully retraced, meaning new low should be seen. But big change in cycles, in trends on a lot of instruments could happen when dollar index, if dollar index moves into this 96, 98 potential support area. Now looking at some of the FX pairs, maybe firstly if we take a look on the euro dollar here, it's now somehow consolidating here. I still think it's a chance for a wave 4. I'm not sure if we'll see break ahead of ECB this week. As you know, there is expectations that there will cut for 50 basis points, but it's really about what's coming next. Is this maybe one and done? Will this be seen like a hawkish cut? But definitely I think that we may see the break after the ECB event. So if 1.10 holds till then, I still think that there is actually a chance that we will see more upside. And I also like how euro is doing quite well, okay, compared to other currencies at the moment. It looks like it's very stable. So if we can recover back towards 1.12 from any reason, I just think that very big moves can be in front of us, because I still think that sooner or later euro will be headed much higher out of this consolidation that has been in play for more than a year now. Now, if we take a look on cable, maybe some short-term swings. Now, still, we had some very nice and impulsive move to the upside. We have seen a pullback. Thought last week that we have reached a low, but because on Friday we have seen this reversal lower, obviously then this weakness can resume even into the start of a new week, meaning today and tomorrow. We already have seen a new swing low here, a small one. So possibly this correction now is coming into the support here around 13050. I think it could be quite interesting level. It's also the swing high that goes back to this July of this year. If there will be a even deeper pullback, still I would be looking this to be maybe as a higher degree wave 4 that can belong to some kind of a ending diagonal. Okay, so as long as we have three waves from the highs of at least this corrective activity, I just think that there is better to stick with a potential continuation higher and just observe the supports here. Looking at Aussie, well, Aussie has seen some very nice rejection from the upper side of the very big triangle. As you know, we have been talking about this last time, and looks like that we have this wave E now possibly in progress here. It's the final leg of the pattern, so still there can be a bit of more weakness. I think that very nice, let me check the 4-hour, very nice supports could be around 660 area, and slightly lower here you have the 61.8%. so this zone could be quite attractive for potential new bounce higher. Now maybe wave E will be much lower, which obviously to the lower side of the range is very possible, especially when you have a textbook patterns, but markets are not always textbook. So it really will be important what kind of a rejection we may already see here, a little bit higher rather than lower here. And whenever we see 5 waves up from those supports, I just think that there can be some interesting opportunities on the long side. And especially if stocks would really stabilize, as I said earlier, if we are here in that wave 4 consolidation, then when stocks are going to see more gains and maybe find some buyers, that's when also Aussie dollar could do well. Now let's take a look on dollar CAD. Now dollar CAD is breaking some trendline support. So what we are seeing is an impulsive decline, but still it can belong to a higher degree. Complex correction can be flat, can be even some triangle, but what's important is that this drop, if we'll zoom this in a little bit, okay, or if you're our member, you can check this on our website where we have intraday wave counts as well. So we have this labeled as an impulse, and now we are in a consolidation here, corrective rally. We are at the first resistance, so it can be quite interesting. We can be approaching some interesting zone here for potential more downside. I certainly think that there's a greater chance that we will see lower prices rather than revisit this 1.4 area anytime soon. So I still think that we are now most likely headed to the lower side of the range. Now dollar yen, we talked this one last time as well. We said that the very important resistance remains around 152. We are just testing some supports here. Possibly we will see 140 tested. That's the swing high here from December of 2023. And also this support should be important as well, around 138. So I think that down here this wave A could come to an end. Okay, but if suddenly, let's say that US yields will recover, the dollar will move higher across the board, then possibly wave A is already finished here and the wave B will be underway. But still 152 either case is very important resistance in my opinion. Here, down here, it's very important support. Let me check just my notes here. So maybe this time we will take a look at TLT. As you know, we constantly look at US yields or treasuries, but this time maybe it's not a bad idea to look at the TLT, because this one already moved very close to this and retested this December 2023 highs here. But still, it looks like that this market has more upside. So in my opinion, US yields can still see more downside, more weakness here. And I think that this could have could potentially send this dollar yen even lower after we see some solid corrective rise, which in my opinion still it will show up at some point. Okay, now maybe take a look here on crude oil as well. Been calling for this breakdown out of a triangle. So far we have some very nice and strong extended lag here, as you can see. So in my opinion, this wave C is underway and could possibly be in the middle of this impulsive weakness. We are now seeing some supports here around 68, but if we see some rally, watch out for 70, 71. This could be the next potential resistance for further weakness here. So regarding crude oil, it's going to be very interesting to see if lower prices will have impact on inflation as well, if this will help to bring down the inflation. As you know, the correlation is quite tight. Let me check if I have this chart here. You can see here the correlation between crude oil and US CPI year-on-year basis. And if the crude oil is coming to the downside here, it will remain weak. Then sooner or later, even inflation should do the same. So expectations, as I said earlier, are 2.6. Quite low, but we will see if they will get it right. Okay, now gold is really stuck in this range here. Everyone is just waiting on this break to the upside, especially on Friday. I know that there was a lot of hype going on that breakout will happen, but normally market does the opposite. So it looks like this consolidation now still will be a bit longer in time here before we break higher, but certainly I just think that this really looks like a small consolidation within uptrend, but it's important to know that we are coming out of this potential triangle here. Okay, even some kind of a wedge formation, top formation can be unfolding here as well as an alternate scenario. So in either case, I just think that we could see some limited upside in the next few weeks, but still think that there is room for 2,600, maybe even more if we see some extensions. But keep in mind that we are moving into these late stages of this wave 5. Okay, so you are now in a fifth wave, meaning that sooner or later there will be new correction, and we know that there will be a lot of optimism going on as soon as we break to new highs, especially if we start seeing some accelerating price action. But that's when we maybe should be aware of this very big pattern and what it means for the Elliott wave when you see sentiment at extremes of optimism. Okay, we know that when extreme shows up, the market does the opposite. Well, silver still somehow interesting, of course. We came back to this 61.8% here. So wondering if maybe silver can finally again outperform gold. Normally it should in the bull runs. And what I'm seeing here is some very nice retest of the 61.8%. We are still holding this level, but for me the most important would be to see bullish level broken, confirmed by the daily, or even better by a weekly close price. I firstly thought that this will occur on Friday, but then we have seen a very strong sell-off and now again trying to stabilize. So the Friday is definitely the most important day of the week. If we would close at that highs around 28.07 on Friday, then I think that we would be headed much higher. So unfortunately now when we are back at these supports, more patience is needed, but I still think that there is a chance for a bounce in validation level clearly here at 26.50. If this one is broken, then I'm afraid that that we are headed much lower here on silver, or at least sideways, than here on metals just yet. Okay. Now, if we take a look at some stocks here, maybe Apple, as you know, it will announce iPhone upgrade from Apple Intelligence, so this could maybe support the markets for a bit. I mean stock, but if we take a look at the wave pattern here, we had some very nice rebound here, obviously back in August, like in most of the stock markets. And what I see now is that we are just pulling back. So maybe now we are in a wave B setback that belongs to a higher degree fifth wave. So thinking that there can be about more upside as long as we are holding this 200 supports or slightly lower. I think that that's pretty strong level down here, and as long as we are above it, I think that there is room for more upside. Now, if we take a look on nvidia, nvidia's came down quite sharply here, but still thinking that we are in a correction, but just obviously much more complex than I firstly thought. So it can be now maybe an ABCDE triangle, or maybe if we see a break of 91, then ABC will be deeper, down to $80, $75 here. So still, I'm thinking that we are in the middle of an uptrend, and this correction is just a pause that sooner or later will take us higher. But of course, those major indexes and stock market in general should hold these levels from August lows. Let me check. I have here Meta here as well on my notes. Okay, so a few weeks back, as you know, I even posted the chart, I think, on Twitter, and we discussed about incomplete uptrend on Meta. I still think that that's a pretty nice price action within uptrend. I like the idea that we feel this, that came back and filled this gap from January of this year when market gapped higher after earnings. So as long as we are above that swing lows, I just think that there is a chance that Meta will break higher. It's in potentially an ABCDE pattern, and now you are in a wave E. So maybe slightly more weakness could show up in the next few days, but I think that we could really be moving slowly into the late stages of this potential bullish triangle. Maybe let's take a look also on Tesla. Okay, so Tesla really going nowhere here, stuck in a very big range. We've been discussing about this idea of a triangle. If you recall, we said that even if it's a triangle, a bullish one, we should be aware of more weakness towards the lower side of this range, because wave E is still incomplete. So we got some rally here for a wave B. There's also a gap that goes back to earnings from July. So this gap seems to be like a very nice ideal resistance. So just be aware that there can be some more weakness before we eventually stabilize. So I still think that much stronger supports and much more important supports are around 160 to 170 in that area. Okay, now cryptocurrencies. Well, as you know, cryptocurrencies really are showing some very unclear price action and structures across the board. With some altcoins are even making some deeper pullbacks, but still maybe it's not a bad idea to zoom out to check where we are on the charts, on a higher time frame charts. And we've been looking and calling this chart, showing you this chart a few times, and I still think that's a way for here, a correction that can sooner or later take us higher. So I'm looking for a push into the fifth wave, but based on the price action that we are seeing within this fourth wave here from March highs, I just think it's very tricky to predict and say that where potentially we may bottom here. But what's the most important is that you have an overlapping price action here. So I'm thinking that this is a correction, because certainly when you want to look for a continuation higher, when you're trying to find the correction, the pause within uptrend that will give you a chance to enter or join this trend, you certainly want the price action that looks like this. Very slow, choppy, overlapping, not sharp, not impulsive. Okay, sharp is this one. So if you look back, if that was sharp and impulsive, then certainly once this correction is finished, you expect something similar in the same direction. And as I said last time, maybe after elections, who knows, maybe even before elections, we will see a break higher here, because normally October, November been pretty good months, and when moves out of these ranges occurred here over the last few years. If we also look at the Ethereum, obviously nothing interesting to see here either, but still we are approaching some very nice strong support. I think the 2000 level still is very important here, around the 61.8%. It's also the swing highs here. If you go back to August 2022, then you even have this first support in January of that same year. So definitely this appears to be a very interesting, attractive zone, but possibly we see another retest of the lows, because if wave C is underway, then it should be subdivided by 5 waves here. Okay, so another low and then potential stabilization. So around 2000 level, I think this thing can be quite attractive. Also, if we take a look on liquidation heat map here, nothing has changed since last time. It's now still a very big, like a magnet zone. That's how I call it here, around 70,000. Still, I mean, they have no real liquidation stop losses here at the low. So that's quite interesting. So we either we retested it or just come close to 50,000 and then take off. But I certainly think that there will be massive liquidations happening in the market, because normally that's how the market functions. Where there are a lot of liquidation, that's when market can test these levels before it will reverse. So I still think that these levels up here should be quite important if we ever get there, and that's when liquidations will occur and potentially we see a turn in price later on. Observe are obviously exchange inflows. So if you suddenly see a break to a new swing low, meaning you see the break below these levels from August, watch these exchange inflows, because if there would be a spike in exchange inflows, it means that this will tell you that a lot of transfers are happening from private wallets to exchanges. It means that there will be a lot of fear involved, because someone will want to sell their bitcoins for something else. Okay, and this kind of a volatile price move and this a lot of transactions could potentially actually trigger a potential bottom down here. So certainly we'll have a very close eye on these numbers, especially if we break these August levels, August lows, because I think it could signal a potential very interesting support or reversal on the markets. Okay, traders, that's it from me for today. Thank you for being here, and once again I apologize for this issue at the start when you haven't seen the chart, because I minimized the chat window. So hope next time will be better. Thank you all for being here, and if anyone wants to join our services and see these updates on a daily basis, join us at wavetraders.com. First, good luck. Bye.